All right, good afternoon then everyone, as we're at the end of another week of trading on Friday the 9th of August. We can't really talk too much about this week without first going back to the back end of last week. You can see Friday of last week, non-farm payrolls, just pretty bad print when it comes to non-farm payrolls. Previous figure revised downwards from 206 down to 179. This month, or I say this month, last month's July's print came in at 114,000, so below consensus at 175. Previous month revised down, I think it's at the 12th of the last 16th or the 13th of the last 16th. Non-farm payrolls previous figure has been revised down, so they just keep revising down. It'll be interesting to see if this month's or if July's gets revised down when we get the figures out the first Friday of September. It'll be interesting how much lower can it really go from 114. So a pretty bad NFP print from the headline, and the rest of the numbers followed suit. You can see the unemployment rate consensus 4.1 in line with previous, actually ticked up 0.2 up to 4.3%. Couple that with the average hourly earnings, both of those missing consensus. A bad print all around last Friday. That sparked a bit of volatility last Friday, and that carried through into the weekend. Right, then we opened up on Monday, and I got my screens 7 o'clock Monday morning, and the Nasdaq was off 6%. Just complete chaos in the Asian session on Monday morning. The Nikkei itself, Nikkei was down 15% at one point on Monday. Just crazy volatility, biggest one-day drop in the Nikkei since 1987. That's not really to do with the US though. The Bank of Japan raising interest rates last week, and at least saying that they want to continue to raise interest rates. Very, very bad for the Japanese stock market. And yeah, I mean, it has bounced back since, so hasn't had the follow through that you may have expected when the stock index down 15% at one point on Monday, Nasdaq down 6%. When I got to my screens, 4.5 for the S&P, and it was something like 3 for the Dow Jones. So super massive volatility on Monday, and you'll kind of expect that to kind of at least remain in markets throughout the week, kind of a bit of risk off trading. But interesting, when I looked at that, the bond markets didn't move too much, and if it was a complete flight to safety, bond markets would push higher, yields would get whacked in line with that. Now yields moved lower with the non-farm payrolls last Friday, but when it got to Monday, the kind of risk off sentiment that you would expect, really that much risk off, certainly in terms of kind of global assets. Apart from that, kind of just a backing out of equities, a closing of positions with equities, with them being at all-time highs not so long ago, has to be super stretched positioning, and a bit of profit taking on that is not surprising whatsoever. That was kind of then turned around. This services PMI, there was fears of recession, fears of recession on Monday. I don't know if there's fears of recession anymore, but that services PMI print kind of calmed things down on Monday, above consensus, above previous, and also above 50. So a pretty positive services PMI print. But kind of Monday morning, or certainly midday Monday, markets were pricing a 50% chance of an interest rate cut, or a surprise interest rate cut over the course of this week, and that was a bit far-fetched. I think markets kind of lost the plot a little bit on Monday, kind of thinking that the whole world was going to blow up. That has obviously not materialized, the fact that we're still sat here. So I'll have a look at charts in a minute, and we'll go through that. But apart from that, the rest of this week, not too much really to go off. Some Chinese inflation, maybe a bit of an interesting one, above consensus, above previous, coming in at 0.5. But that is the year-over-year figure. 0.5% inflation over the course of a year in China is not too much to worry about. So above consensus isn't really too much of a difficulty for global markets. The RBA didn't really do anything for us on Tuesday. Kind of just stuck to the script of inflation still a bit too high, we need to get it under control, interest rate hikes are still a possibility, and as you were really from the RBA. We'll come around to some charts and have a look. You can see a massacre across stocks Friday and then into Monday across your S&P, your Dow Jones, your Nasdaq, your Russell. These are obviously 4-hour charts, but if you look at the S&P from the high down to the lows, that is, you might not be able to see it behind the buttons, but that's 7.2%. You have a look at the Nasdaq. I'll blow this up so you can actually see it on the Nasdaq. But from the high back here on where it was on Friday down to the lower it was on Monday, 12% drop in the price of the Nasdaq. So big downside for stock indexes. That was across the board, right? The DAX, the FTSE, the Nikkei did the same thing. You see the Nikkei, from where it was on Thursday of last week, which is kind of this high there, from there down to there. There's a 21% drop in the space of pretty much 3 days. So straight lined it downwards, and you can see the bounce back. Right, I didn't have the follow through that markets were kind of thinking on Monday it will have had. Just markets have kind of stock indexes have kind of chopped around. You can see the S&P, the Dow Jones, the Nasdaq, the Russell choppy. The DAX and the DAX and the FTSE kind of grinding their way higher. The Nikkei kind of grinding its way higher as well, but not too much really to see there post the craziness on Monday. The VIX hit 65 on Monday and then was sold straight back, or pushed straight back lower. It's now back at kind of 22, 23 at this point in time. So yeah, not much, just chaos on Monday morning, and then after that just normality kind of resumed, which is a bit crazy. FX has been a little bit all over the place this week. You can see your Aussie is pushed higher, Kiwi is pushed higher, cable is pushed lower, Euro dollar is pushed lower. Swiss dollar Swiss and dollar yen kind of got whacked on Thursday into Friday, but once we got into Monday, kind of FX didn't really play ball in line with that downside in equities, which kind of reaffirms the stance that was just a bit of profit taking rather than any actual kind of complete risk off trading. They're putting it down to recession fears. And the Bank of Japan raising interest rates. But this was sparked by the Nikkei. Didn't have the follow through to the rest of the countries when they started to wake up. Bond yields have had a pretty good week. 10-year yields got back to 4%. It's a bit off that now at this point in time. And the 2-year and the 10-year are very, very close to kind of reinverting, undoing the inversion on the yield curve. So that's something we'll continue to pay attention to going forward. Back kind of similar footing, still slightly inverted. The 2-year still slightly above the 10-year, but we're getting closer to the point in which they may actually go and turn around for us. Apart from that, like your Japanese yen over the last couple of weeks, you can see your Aussie yen, CAD yen, even like dollar yen down kind of 20 handles in the space of 2 weeks, 2,000 pips. Cause kind of chilled out this week and taking a bit of a break. Dollar yen has taken a battering, so that move isn't going to continue forever. I don't know. They say an unwinding of the carry trade, which is completely understandable. But like even if the Bank of Japan go and raise interest rates by a full % from here, they will still only be at 1.25%. If the US go and cut interest rates by 3%, the US will still have higher interest rates by 1.25% than Japan. So the problem for them isn't kind of completely fixed in terms of weakness for the currency. I kind of think is it maybe worth an opportunistic buyback against it, as there is still an extremely wide gap between interest rates in the respective countries. Gold, let's leave gold out of this one. Oil down on Friday, kind of fueled by recession fears, and has turned around this week. Tensions in the Middle East, oil inventories had a miss, so oil down last week, or to end the week last week, up over the course of this week. Bit choppy when it comes to that, but that's pretty much what's gone on over the course of this week. We'll do some US data. Next week we got inflation, we got retail sales, we got Michigan consumer sentiment. So there's a bit for us to go off. Do recession fears come back? Let's see how that pans out over the course of the next week. But we'll cross that bridge when it comes to it. For now, have a good weekend, everyone. We'll be back on Monday with another video. But until then, have a good weekend, and I'll speak to you all next week.